Let me ask you something. If the US market's doing fine, why does it feel like Americans are still stressed every time they open their banking app? Everyone says the American economy is the strongest in the world, but at the same time, the average investor feels insecure. Consumer spending is selective, and the market seems to be moving with the brakes on. So today we're going to answer a very simple but powerful question. What is the real US market outlook for 2026 beyond the headlines? Now, if we haven't met yet, I'm Chad. I'm the presenter for Zero Markets. In our videos, I bring valuable insights so every investor can become more critical and more strategic. Now, in the US, there's a classic expression, don't fight the Fed, and it's never been more relevant. See, after years of stimulus, high interest rates, stubborn inflation, and an economy that refuses to break, 2026 arrives with a curious mood. Now, it's not euphoria, it's not crisis, it's caution. It's like driving down a long road with a half-full tank, not knowing exactly where the next gas station is. Let's break down the US market outlook for 2026 into three parts, and that's the way Americans like it, straight to the point. First, let's talk about the American consumer. Smarter, less impulsive. The average American still spends, but spends differently. Less impulse buying, more price comparison, and more focus on value, not status. He's the guy who used to upgrade his iPhone every single cycle. Now he holds on just a little bit longer. And of course, this directly impacts retail, tech, and fast growth companies. The market has realized one thing. The consumer didn't disappear, he became more rational. Now, second, the US financial market is now less hype, more fundamentals. In 2026, the American investor looks a little more like a risk manager than a gambler. After past excesses, now it's less hot stocks, fewer miracle promises, and more focus on cash flow, profit, and efficiency. The money's still there, but it only moves when it makes sense. And that's why major indices remain very relevant. Solid companies gain preference, and volatility becomes part of the game, not the exception. But before I share the third point, please like this video so YouTube knows this is the kind of content you want to see. After all, those who grow their money study, read, stay informed, and follow real intelligent market insights. And if you find this content valuable, please subscribe to our channel. It helps us understand that our content matters to you. All right, the third and the final point, the role of government and the central bank. Now here's the key. The US markets in 2026 lives under the constant shadow of the Federal Reserve. It's no longer about endless stimulus. It's about balance. Every interest rate decision, every single move stocks, it's no longer about endless stimulus. It's about balance. Every interest rate decision, every signal moves stocks, the dollar, and expectations. And American investors have learned to read between the lines. They don't react to what the Fed says. They react to what the Fed implies. So, what's the big truth? The US market outlook for 2026 is not a crisis, but it's not a party either. It's a market that speaks of maturity, selectivity, and strategy. Those who understand this don't panic. Those who ignore it are going to get frustrated. And of course, they're going to lose money. The game now is different and requires reading context, not just charts. Now, does that logic make sense to you? If this content helped clear things up even just 1%, please subscribe to the Zero Markets channel, because here we do not sell promises. We deliver vision, we deliver context, we deliver market intelligence from the US to the world.